I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews with Gareth Ward, the COO of Bumper. Gareth, welcome to the show, and it is a pleasure to have Bumper back once again.
Yeah, thanks, Ashton. Pleasure to be here.
You're very welcome. I'm excited to dive into the solutions that Bumper's providing, a lot of protections that are well needed in the market for downside protection, protecting from risk. I would love for you to kick it off for our viewers with just a high-level overview for those who didn't see our first interview with Jonathan, the CEO, about what is Bumper and a little bit more on the solutions that you're providing into the market.
Yeah, so really simple. Start with a simple analogy in that, let's say you've got some ETH, you got one ETH, maybe you picked it up at $3,000 when it was a bit more toppy than it is now. And you've essentially protected it through Bumper, 90% value. So you know that if it drops below $2,700 worth in value, then Bumper protocol kicks in and makes sure that you're protected. So the price can plummet down to 2,000, let's say, and you can pull it out at that point and you'll walk away with $2,700 worth of value. So you pay a premium for that, and that premium incentivizes the other side of the marketplace that helps provide that protection.
Mm-hmm. Definitely, that's great to know. And that's, from what I understand, it's a little bit different than people that are traditionally trying to hedge their assets will sell into Tether or just try and sell off and buy back lower. But you don't have to sell off necessarily. Is that right?
Yeah, exactly. So the beauty of it is that the kind of other options are, options desks, which can be very clunky, not quite enough liquidity in the market these days, not in crypto anyway. And you kind of fix timelines, that kind of thing. You then have the other option, I suppose, a stop loss, which is a one-way ticket, right? So you put a stop loss at that, 2,700, and that's it, you're out. And if it pops back up above 2,700, it's a small dip that was inconsequential in the whole scheme of things. Mm-hmm. You wake up the next morning and you're out, and ETH's popped back up to $3,500. I think we've all been there. It's really frustrating. So what this does is it just gives you that, that peace of mind that you've got it protected. So it doesn't matter if it goes below a certain point, which is the stop loss mentality, but you've also got it on the way back up. So you can essentially buy back up. And we do some pretty, it's really simple in theory. To execute is very difficult. And there are some fundamental hurdles we had to resolve. And it was in that resolution, kind of solutioning those problems, that we actually came up with Bumper.
Mm-hmm. Very interesting, Gareth. And from what I have seen on centralized trading platforms, they have stop losses, like you mentioned. They don't really have something like this. And then on decentralized platforms and trading on Uniswap, they really don't even have any of those functionalities. So with Bumper, I'm guessing you're going to need to use the wallet that you would use from the decentralized exchange, or having your own custodied wallet, and then you would just interact with the Bumper platform to be able to protect those assets? Yeah.
So what happens is that let's say you use MetaMask, it's decentralized. So you just connect your wallet to the Bumper dApp. You go into that dApp and you take out protection. You're then sent back a representative token called BETH, for example, if you're sending ETH to the protocol. And that will represent your proportion of the unstable asset pool, the ETH pool. On the other side, and what we call those people that are taking out protection, they're getting a policy, those are takers. And then what we have on the other side are makers. And makers are essentially liquidity providers that provide stablecoin to the protocol. And what they do, they receive a BUSDC, for example. If you send USDC, you get a representative token back, which represents your proportion of the capital pool of the stablecoin assets. So what then happens is that you now the makers are incentivized because they receive the premium fees from the takers. The takers pay premium fees to maintain the policy. Bumper Protocol takes a small clip out of that to help, keep developing the protocol. And essentially that's how it really basically works. You have both parties fundamentally incentivized one way or another. One is to protect from downside risk, and the other is to earn yield.
Mm-hmm. Yeah, and your team recently launched the DApp going live for users to start earning yield on the stablecoin and to start protecting assets. And now on the stablecoin, I saw that in a short amount of time, over $10 million was locked into the DApp. That's incredible. Can you talk about the launch and that?
Yeah. It was really good. We had our dev team. It was a fun day, actually, very kind of methodical in deployment. Checks and balances were very professionally done. And what we I know I spoke with Jonathan the day before, and we thought, if we get $1 million in the first 24 hours, I think that'll be a win. And when we went live, it was just, it was moving so fast. It was all of a sudden $1 million, and then next minute you're kind of talking 4 million. And that was in 5 minutes, 4 million in 5 minutes, and then 8 million in the first 4 hours. We're now sitting at about 11.7 or 8 million. And so it's been really successful. This was designed to bring LPs into the protocol, to play that maker part of the protocol, to incentivize them, but also to get people interested in Bump. And this was an opportunity before pre-sales and a public pre-sale and a proper public sale, like an IDO, to actually get yourself some Bump. But to do that, you've got to earn it. You've got to bring some USDC into the protocol. You then have an option just to farm it. You farm Bump by providing that entire amount, or you can take 20% of whatever you deposit and you can use that to buy Bump directly. And that can actually increase your yields quite well, your Bump allocation, far greater. So, it's been really, really positive. We've been pretty chuffed with it, and hopefully it keeps going.
Definitely. And is there a limit to how much should go in there, or is there a threshold where if there's enough, or if there's a lot, then it's gonna make the protocol work better or worse? And can users still put in it right now?
Yeah, absolutely. So you can still put it in right now. There's no limit. What we've done is, it's a bit unusual. We've tried to do something a bit different to what's out there, because we felt the TVL was an important aspect, and getting more value locked into the protocol really will help the protocol. So what we did was we aligned the price of the token with the TVL. So as you deposit, you capture a new price point, and that sets the new price point that was captured. So it drives the price drive, it goes up, and the value, as the value goes up, the price goes up. And so it's almost a something that you don't need to actually set limits on people. It's kind of a native limitation. So it's how much is value there is, and what the protocol is capable of, what the team is capable of, and what we're outputting. So I think, by all accounts, we've had a very positive response in such a short time.
Definitely. And with users locking in their funds, they're able to acquire Bump tokens. Can you talk about the timeline on what happens when you lock in your funds, then you're waiting for bump tokens, and then users are also waiting on the Ether side as well?
Yeah, so there's a lockup to October 14. That's for this LP program. At that point, you'll be able to withdraw. The ETH side of things we're going to bring in later, and that's something that that is the actual protection side. So you've got to see this protocol as two parts, right? So the first part is your taker side and your maker side, and we've done the maker side, and now we will build out the taker side. So it was important to try to, I guess, front run that liquidity provision so that it's there ready for people, because if there's nothing in there, then people can't take protection out. So so we wanted to build that up, incentivize that accordingly, and then we output the, deploy the actual protection side, which is far more complicated side of things, and requires a fair bit of work.
Definitely. And maybe you can touch on the Bump token a little bit more. People are locking in their funds to acquire Bump, and then when they lock, when the Ether part is live, does it require a small amount of Bump tokens? How else is the Bump token used in and outside of the ecosystem?
Yeah, so when you come into the protocol, whichever side you're on, you need to stake Bump. So Bump will be critical in terms of accessing the actual marketplace. The other thing is that eventually we will look to, you can pay your fees in Bump. There'll be some utility and all of that. But the biggest thing with tokens, and something that, I think few projects actually kind of really get, is that you need to have you have to think about whether you actually need a token. Like, we're in crypto, it sounds crazy. Do you need a coin? Do you need a token, right? And there were a lot of projects over the years that really didn't need a token to function. But what that token was really an effective means of fundraising, which is all good and well. But for future, use of the protocol, it may not have needed a token. So it's really important to put the value into the token, to make sure the token is almost like the oil in the engine, which it is. So what we try to do is drive everything towards that value in the token by utilizing it. So there will be a whole bunch of a range of things that we will bring out over time, incentive based and access passes and all kinds of things, so that the more tokens you hold, the more committed you are. Obviously, it's a governance token, so first and foremost, it represents your opportunity to vote and be a part of the community to decide on the future of Bumper. But what we, by trying to drive everything into the value of that Bump token, is what you're doing fundamentally with tokens is you're aligning the user with the token holder. So like a traditional company where you have shareholders and users of that business that buy a product from the business, for example, they're not aligned. So the user goes into the business to buy a product because they need it. The shareholder is there to extract profit from the business. So they don't align. And what tokens allow you to do in the ecosystem that is cryptocurrency is allows you to align that. So by making the token critical to the use case and the utility of that protocol, you now create a situation where the token holder is now a shareholder that has value and can extract economic value from the protocol, but at the same time is also a user and can use the protocol needs to use, have that token to actually use the protocol. And so everything we can do to drive, value into that Bump token is only going to benefit the user and the token holder.
Definitely, Gareth. Well said.
Yeah.
And so you mentioned October 14th, it'll be unlocked. Can you talk about the main goals for your team between now and then, and even just the end of the year? What are the main focuses you're looking at delivering?
Yeah, so I mean, the main thing is the build, right? So we went into an early design and scoping phase, which involved the entire build. We broke it up into two parts, designing for the maker side and then designing for the taker side. We then deployed the LP program on the maker side. We then went into a design. We've gone into a design and scoping phase now, so that we can further evolve. It's actually got bigger than it was. It's becoming more complicated. We're addressing a lot of really interesting things, and we're trying to tack on some more, I guess, opportunities to deliver a product that has a bunch of bells and whistles from the start. So what that means is that we felt we needed to go back to a bit of a design and scoping phase again. So we're currently in that, and then we kick off the build again, and we'll move through to the end of the build and release the protocol in its full glory. And then after that, we have to the kind of challenges will be iterations upon that. So we'll want to add new coins. We'll look to a BTC, a kind of wrap BTC or MBTC or something like that. And then we'll also look at kind of L2 solutions, other blockchain networks. The other thing is that we've got, a lot of parameter settings that we will go to market with. And so what we want to do is then obviously when it's out in the wild, we adjust those parameters, trim them and make them better, and just make the whole Bumper protocol far more efficient. So there'll be a lot of iterations, and then obviously we'll be keeping an eye out on regs. That always seems to be the kind of looming cloud on any cryptocurrency project, whether it's DeFi or CeFi or anything. So always keeping an eye out on what the latest status is with that and how we can adapt to that.
Definitely. Lots of stuff to do. For the viewers that are looking to start utilizing on the USDC side and to follow along for the updates as your team continues building, what's the best way for them to get involved and learn more?
Yeah, the best way is, jump in the community. The Telegram chat is really good. We've got a very good engaged community, asking some really good solid questions. So you'll learn a lot there. So that's the TG channel. It's Bumper Finance, and the same name at Bumper Finance on Twitter. So from either of those, you'll find everything. There's also a Discord channel as well, but you can get all that information via the Telegram pinned posts and whatnot.
Sounds great. Gareth Ward, COO of Bumper, thank you so much for taking the time to come on the show. I will leave those links in the description box below. All the best with the ongoing growth of Bumper, and let's follow up in the near future.
Great. Thanks, Ashton. Really appreciate it.